Anyone know who this is? In this august audience, anyone know who this is? Pardon? Pythagoras, good guess. That is actually what they were trying to suggest he was the descendant of. This is Pacioli. Pacioli was the monk who codified double-entry bookkeeping in the Renaissance. And that might not sound so barn-burning today, but I'll tell you, at the time, the way you kept the books was in the morning you had this much gold, and in the afternoon you had this much gold, and that was it. And it was this technical innovation, one of a few technical innovations, that unlocked the explosion of commerce worldwide in the Renaissance. And so now we're in another phase. This is a coffee house in London. This is an actual representation of both coffee houses and Londoners. And it was from coffee houses that the entire field of insurance was born, because ships would ply the waves, some would not come back, and you would be bankrupt. But ships would come back from overseas ports, and it was said that your ship has come in. Which, by the way, that's why we say my ship came in. Because when your ship came in, it was a multi-billion-dollar IPO. It was exactly the same, but the risk was enormous. So people, peer-to-peer in coffee houses, started saying, I'll put some quid in a bucket, you put some quid in a bucket, and if your ship doesn't come back, you can take the quid, and if mine doesn't come back, I'll take the quid, and if no one's it, you'll just keep the quid in the bucket. And there was someone sitting next door to one of these conversations who said, oh, hello, my name is Lloyd, and I'd like to keep your money for you. And this was, of course, Lloyd's of London. So it came from this peer-to-peer chaos that this entire global industry of insurance and risk management. And where are we today? I'm going to explore with our next panelists, Amrita Haar and Chris Autry, if I could welcome them up to the stage. Amy and Chris, come on up. Because we are hearing a lot about these things, blockchain, crypto, DeFi, distributed finance, Web3, and most of us wonder what exactly it means. And many of us use the monikers without having any idea what exactly it means. So we're going to find out what it means. Chris and Amy, welcome.
Thank you, Rob, for having us.
Yes, and thanks for coming from Canada and
Florence,
Italy.
Speaking of the Renaissance.
Yes, yes, not a bad place to be. By the way, I'm gonna, just for fun, I'm gonna leave this coffee house image up here, because this is exactly the way a blockchain conference looks today. So this is our background. So let's start with this. What the heck is Web3?
Amy, do you want to start?
Sure. I mean, I think to understand Web3, you have to start at Web 1.0.
Okay.
And then move to Web 2.0, and then understand where we are in
Okay, well, we only have 19 minutes.
Right. Web, I mean, Chris really summarizes it well. You go from read to write to read and write. And what that means is Web 1.0, I mean, we were users of the internet, were consumers of content. So you have very few creators creating static content, which you're absorbing. Web 2.0, we see this shift in the first use of the term in 1999, and understanding really that the users were encouraged to develop content in addition to consuming that content. And that's really where we're sitting today is Web 2.0. And we have...
Where we're the consumers and the creators.
That's yes. Right. Yeah. But it's marked, I think what we need to understand about Web 2.0 is marked by a lot of surveillance, a lot of invasive ads, and a lot of centralization.
That's right.
And that helps to define where we're moving to Web 2.0.
Right, so I just boiled it down very quickly like a kind of tech person. So Web 1 is read, Web 2 is read-write, Web 3 is read-write-own. And the own part is where you're supposed to own your identity and your data, right? But let's be clear, the definition of Web 3.0 right now is kind of all over the board. There is not a solid definition, and I would say we're at kind of Web 3.00001, right? So there's the promise of what it is, and then there's the reality. And obviously, Amy and I spent a lot of time talking about this. One of the things, well, that sounds great, decentralized and all this, right? One of the things that if we take the internet that we all remember from 1993 and the promise of democratization and all of this and free and everyone, right? We saw that very quickly be consolidated in the hands of very few. So what is to stop this promise of Web 3.0 going the same direction with the players that play controlling the market, right? So let's hope that doesn't happen. But like I said, if history is a good indication, then we could very well end up in that direction.
And Tim Berners-Lee, envisioned Web 3.0, I think, called it the semantic internet. So a smarter internet where you've got the ability to interact through AI with your data in a whole new way. And when this data is connecting with individuals with a layer of intelligence built.
I was going to say that's a really important part. It's not just read, write, own. The other thing with the promise of Web 3.0 is AI built into the whole system. So software talking to software and a whole bunch of intelligence happening in an underlying layer of the protocol.
Okay, great. So that's a good context. I love that. Read to write and own, or read to write to own. And a new way to distribute that ownership, hopefully, if the world works out the way we would love it.
We would like it to, right?
The way we'd love it to. So let's go down just again for a contextual, sort of definitional. What's DeFi, or distributed finance? Amy, you're a lawyer in the blockchain space and been active for, I'm going to say, a very long time, insofar as anyone's been active for a very long time in the space. So what exactly is DeFi?
DeFi is portmanteau for decentralized finance. So really, it's an umbrella term for the financial products and services that are available without the necessary use of a financial intermediary.
Okay.
I think that's the simplest way of thinking about it, but it happens to be quite decentralized. And what is decentralization? And I think that's really important to understanding what DeFi is. So it's this process of moving control and power from the center of an organization out, and that applies within a financial ecosystem as well. And that's what we're seeing with the availability of new financial products and services.
But actually, you can think of traditional finance as CeFi. So people have been calling, the opposite of DeFi is what we all have today is CeFi,
right.
Centralized finance, right?
Right.
Yeah. No, I just wanted to point that out.
Yeah, great.
Because people don't say CeFi, but it's kind of,
that's the new thing. The VCs are going to start investing in CeFi.
Yeah,
well,
yeah.
I'll tell you though, when the VCs are investing, not a dig on the VCs, pretty much any investor or entrepreneur, when they're investing in DeFi, what they really want to see in the future is CeFi.
CeFi, that's right.
That's the challenge, because that's where the money is made.
That's right. Yeah.
So what would we like to see this stuff become? Give us a picture in 5 or 10 years, and this has really started to take off, and it's not going to be, I'm going to guess, it's not going to be economy-wide, worldwide, all DeFi in 10 years. But 5, 10 years from now, what do we hope to see from this revolution?
I think of it as sort of like the new lemonade stand, right? Where everybody is able to, you're fostering this greater inclusion for excluded and unbanked individuals. And so what we see, what I would like to see is greater inclusion within the financial ecosystem and building a digital ecosystem in which everybody can participate, and where the exchange of value and money becomes just as easy as the transfer of information is today.
Again, like a more sophisticated version of what we were hoping for starting in about 1993.
Right.
The democratization of, well, like Amy just said, people that currently do not have access to CeFi, right, which is a lot of the third world, a lot of the second world, right? In my world, it's anyone or anything transacting point-to-point securely with anything else without being, charged a huge amount of money like we all are now.
Yeah, so tell us briefly, Chris, about your world. When you say your world, you have a company, Iothic, and what do you guys up to?
So one of the big things that we've been focused on is decentralization, right? So, and everything that means, right? So one of the big problems with all of this DeFi, and even going back to the CeFi comment, is we're all kind of stuck in this client-server model of the world that we've been in for 70 years, right? And so everything kind of goes to, the cloud's perfect example. Everything goes to some centralized or some mid-level, and then back to central, and then back out, right? But in a real decentralized world, you get anything talking with anything else securely in real time. And more importantly, you get the analytics and the action on those analytics done there on the spot. So really decentralizing all communications, right? And that comes to finance and contracts and all the stuff that we've been talking about, right? That's an ideal world. But don't confuse decentralized capability with decentralized control. Those are very different things, right? So in our world, when we secure...
Explain that a second, Because I mean, I kind of think I get what you mean, but I
Yeah.
think there's something profound in that.
So yeah, so like, in our world, when we say, okay, we're going to do this decentralized network, obviously there is a central way that that decentralized network becomes deployed, right? Or if you want to report on that decentralized network, you have to have some way of getting some centralized thing out. But the functionality itself is fully decentralized, right? So one of the things that technology companies, so I won't say Cisco, but I will say Cisco, right? And other players have been trying to do when they try to do decentralization is they take a center and make a bunch of little centers. But that's not real decentralization. Real decentralization is literally anything to anything in real time, right? So, but in order to have that happen, obviously you've got to deploy that, right? So, you can't just start with one thing and have that propagate through the whole system, although maybe you can, but not right now, right? So there's some way of, managing the system from a deployment standpoint, not a functionality standpoint, right? That's what I mean by decentralized functionality versus centralized control. I mean, they are different things, right?
So how is so a lot of this is new, it's still in many ways experimental. There's a lot of money going into this space right now, despite the downdraft in global venture capital. One space that continues to attract a lot of money is Web3 and to some extent DeFi. So how do you see, what's the most interesting stuff that you're seeing in this space right now? Either one, Amy or Chris.
Yeah, I mean, I really love that you put this coffee house
Isn't that
picture.
cool? Isn't that neat?
In addition to the evolution of insurance,
Yeah.
also the evolution of the basis of our capitalistic society being the stock markets happened in coffee houses.
Yeah.
And the beauty of it at this time was that it was a private governance system.
Yes.
Right, operating. I mean, the state didn't step in until much later to govern what was actually happening within these coffee houses. And I think we're sort of going back to that with DeFi. Right?
Yeah.
Giving the power to the people over their own information, over their own governance of how their data
Identity, all of
is
it, yeah.
managed in their own identity and how they choose to transact and leverage to benefit themselves. So I think that's really exciting. And that how does that manifest, practically speaking? I mean, you see people having global access to, anybody with access to internet having the ability to transact in any global currency, the ability
Invest and do contracts.
to
Right.
earn yield on their deposits.
Much less making transactions between different crypto, for instance, or crypto to fiat currencies and back and forth. That's still a big messy area. In fact, Andres and Helen on the next panel have a company called Firedrop that I'm involved with that's trying to tackle some of that stuff.
But also, I want to point out, from a security perspective, there is, regardless of the technology, in a fully decentralized system, there's not one cryptographer that would argue that a fully centralized system is better than a fully decentralized system, in the sense that if there is no kingdom to get the keys to, then there's no kingdom to hack. So things like, you see all these hacks today, like WannaCry and Stuxnet and Acid Rain and all that, right? That's because there is a kingdom. Right? If you've got no kingdom to get the keys to, it doesn't make any difference if you have a quantum computer or not, right? So that's one of the things that we are focused on, right? Like basically creating a world where there is no kingdom. Like, what are you going to hack, right?
Well, but how does that relate to commerce and creating and garnering value from interactions between individuals, consumers, companies, et cetera? How does that vision of an egalitarian, inclusive future relate to making a profit?
I'll just say one quick sentence. I mean, in terms of the security part, I mean, we see these crypto exchanges hacked all the time because that is a kingdom, right? There are keys to get that. But if you've got all these little, point-to-point things, then, maybe you're going to get somebody's one transaction, which I guess could be good if they've got $1 billion. But I don't know. Do you want to pick up on it?
Yeah, I mean, I think it's integral to the functioning of the entire system to have this autonomous security built in, where you have smart contracts, enabling the governance of the ecosystem, which allows previously untrusted parties to now trust each other and transact in this new type of, lemonade stand, so where the flows between the spenders
Well, that's
and the
really
savers are direct.
But also add AI to that too. So it's not just people interacting with people. There's also systems learning about all of the contextual transactions, not
Yes.
just between individuals or groups, but then, you know, the context of like what's just happened, I don't know, with that currency or whatever at this time in this location.
Right,
Like it's all
right.
the other underlying stuff
Right.
that can contribute to the security of the.
Well, so the security is the risk side of the equation, which is essential, and I know you're both involved with that. But the return side of the equation is enabling that trust, so that you can have peer-to-peer, business-to-business without those intermediaries crushing the giants, so
That's
to speak.
right.
Because a lot of times the intermediaries are there in order to provide trust that if
That's
I
right.
give the money to this person
Right.
through this intermediary, it's actually going to go there and it's the right person. And
But the one thing I will say, and it came up yesterday too.
it's a big cost.
Amy and I talked a lot about this actually, and that's all right. But if you've got a fully decentralized system and there's no, I don't know, Amex or eBay or whoever to complain to and something goes wrong, then what? Right? So think about, you know, like a DAO or like one of these systems.
Explain what a DAO is.
A decentralized organization, basically, where there's nobody, there's no board, there's no CEO. People who've got the most tokens actually have a little bit more
You
voting
have
power, like
the most
stocks.
tokens,
Yeah.
cryptos in this DAO, and then you have more voting power because you have a larger number of these tokens.
But if something goes wrong, there's nobody to talk to, right? So this is one of the big things about if you take like a decentralized financial system. We talked a lot about this, and something goes wrong, somebody rips you off. Who are you going to call?
So yeah, go ahead, Amy.
Yeah, I mean, I think it's blockchain in a lot of ways is like the law, right? And we have to revert back to, a DAO or a decentralized autonomous organization really has no legal entity in jurisprudence
Right.
at the moment, because it is, you've got the storage of the data is not in one location, it's in many different locations. And so
Right.
who do you have recourse to? But similar to how law is a set of systems and rules that society agrees on, in order to facilitate the dissemination of information, and we can all agree on those rules, that's similar to how blockchain operates.
Yeah.
So when you have these smart contracts or
Right.
these self-executing pieces of code that facilitate that function, but there is of course always recourse to the legal system. They don't, DAOs don't operate independently.
Lawyers will still
enforcing
have-
Lawyers will step in. Right?
Yes.
Our AI lawyers will step
Yes.
in. Right?
Yeah, so it's almost like finding applications where that kind of a situation adheres is critical to finding the opportunities to apply a DAO or to apply DeFi or whatever. In other words, what I'm saying is situations where you can define the initial conditions, define the rules of engagement, and set it running, and hope that it operates well. So are there applications you're seeing for any of this big mess where there's hope, there's some possibility that this will become more than just promoting my latest NFT? Please go online and buy my latest. No, I don't have an NFT, I'm sorry. I probably should, but no one would buy it. Anyway, any applications where we see some hope for applying these capabilities?
Pancake.
Okay, explain.
It's just DeFi, centralized DeFi, or what's the other one? Aave, where you can do the lending platform. So yeah, it's starting to happen. They're just decentralized DeFi. You know a lot about the apps. Maybe you can help.
Oh yeah, I mean, if you follow the capital flows into sort of the DeFi world, we're moving very quickly into some billions and billions of dollars worth of capital being deployed, and through networks and protocols that enable you to earn yield, to
Right.
realize on arbitrage opportunities, to lend your crypto and earn.
Right, and I can lend my crypto
And get interest, yeah.
and get an interest, and I'm not going to Chase Manhattan. Oh gosh, I'm dating myself again. I'm not going to JP Morgan Chase.
Yeah.
I'm setting it into this system with predefined rules, and I expect.
There's a lot of ways to do it. It's like
It's a coffee house all over again.
It is.
Yeah.
So you've got all kinds of exchanges that are facilitating the function of a coffee house in a way that's disintermediating the actual.
So there's a lot of promise. What is a challenge we're facing aside from the cybersecurity challenge that Chris you mentioned? What is a challenge we're facing to see the broad diffusion of these capabilities?
Has anyone heard of MICA? Then we should look it up. MiCA is now a European a law that's talking about it, right? So governments, of course, see this and do not like it because they have no control over it. And the Europeans, so one of the big things in DeFi is stable coins, and almost all stable coins now. So it's a token that is backed by real assets, right? Dollars, right? So the Europeans,
Like the one that just melted down.
well, that was Luna, and that was an algorithmic one. But there's USDT and USDC, right? So the Europeans don't like this because all these stable coins are pegged to the US dollar. So like, what about us, the euro, right? So they're starting to put these laws in saying, okay, well, if you want to be a stable coin and you've got more than $5 million in assets, then you have to go through all these regulatory monkey dance hoops, right?
So basically, they're making it even more attractive
Nope,
for
more-
people to work with you. I'm being facetious.
Yeah, no, I mean, they're like, okay, well, if we can't control, we're going to make it really hard, right? And that's what they're doing, right? So all this government regulation, and in the U.S. too, and it's not just those type of regulations. I mean, like, if anyone's been involved in the crypto markets, depending on what country you're in, there's all these regulations. Like in the U.S., you can only use Binance US, right? Or, taking money in and out of exchanges is like a complete nightmare. And they're making it really hard because governments, right? Because they cannot control it and they do not like it.
So, Amy, as a lawyer, as someone who works with regulators in the regulatory framework, how should we approach this? I mean, is the right approach laissez-faire? Let's let all this stuff happen and it's going to be great, or what's the role of government and regulation in this context?
Good question.
I think it's extraordinarily important, and I think the reason we don't see greater adoption is because of a lack of regulation, and a lot of players within the industry are asking for greater clarity as to what is, how do we characterize these tokens?
Right.
How do we comply with Securities Exchange Commission rules? How do we ensure compliance? How do we, ensure a viable platform? Because that's really what everybody wants to do, is to create that value, and compliance on the regulatory front is one of the most effective and practical ways and necessary ways of doing that. And you see a lot of, especially in light of Luna, which we've just seen
Crash.
Right.
blow completely up. I think you'll see a lot.
But they were
more.
presenting it as a stable coin based on an algorithm, and of course algorithms never fail. And guess what happened? It failed. And how many times are we going to have to go through this?
Exactly.
Long-term capital management, remember that? After long-term capital management failed miserably in 1998, a couple of the founders said, yes, but you don't understand, from a mathematical perspective, that could never happen.
Yeah, and it did. No, that's right.
So I'm afraid some of this stuff is going to be happening again.
I think it's a balance, right? I think, there needs to be some regulation, but also one of the reasons people like this is exactly because the government is not involved in it, right? So there's
for both good and bad.
For good and bad reasons, exactly right. So it's a balance, right? It's a balance. But there's been messages put out by like the U.S. government or the UK, like, don't do this, it's dangerous. I mean.
Speaking of danger and opportunity, because they're related, quickly as we conclude, if you're not in the crypto, DeFi, blockchain, hoo-ha space, but you're and you're interested, you want to get engaged, you're smart enough to realize, hey, there's a pony in there, and I really need to get on this thing. One resource or recommendation that you have for how people should should engage or be informed? Amy?
Educate yourself, take a course, buy crypto. It's not just one, two. I would also say buy crypto, pick a network.
Yeah.
An exchange.
Participate.
Yeah, participate.
And understand that it's a risky.
By the way, I have to say, just going out early on after learning about this and just saying, I'm just going to try and buy, this was really early, and it was so incredibly painful.
It is.
And difficult. Now it's super easy. But just spending an hour learning a little bit, don't spend a lot. But buy a little bit to learn about it.
There's one good guy on the YouTube called Coin Bureau, and a British guy, and I would recommend his channel actually. Coin Bureau, yeah.
Coin Bureau.
Yeah,
okay,
and he can start from the beginning, but very hugely knowledgeable British guy, so it's easy to listen to, but knowledgeable. So if you wanted to learn, I would do that, and then exactly what Amy said, start with a low. I mean, I did when I started doing it like 3 years ago. I mean, I started with a very low amount, and then kind of work your way up and.
Right. Or down. Work your way
down.
Yeah. Well,
first rule of investing: if you can't lose it, don't invest it.
Yeah, well, Chris, you've brought us back around to the beginning. We started in London. You ended up talking about a UK guy who's your go-to guy to understand the space. Amy, you talked about the promise of private governance and actually taking out all of those middle organizations and being peer-to-peer, but the specter of surveillance that maybe we have the opportunity to overcome that specter of surveillance. I'll propose that as we do have that opportunity to overcome the specter of surveillance, people will discover how to add surveillance on top of this wonderful, beautiful, idyllic Web3 quickly.
Actually, I would like to leave it with Florence and not London.
Well, we started with Pacchioli.
Yeah, exactly. So we're going back to Florence. So many of you know that the Duomo in Florence, right, was built with the idea of having this dome that they had no idea how to build like 110 years before they could do it. But what they did know is that at some point, somebody would figure it out.
Yeah,
and that's
right.
a bit how this world is going to look.
Yeah, so we're building the church, but remember
we don't know how to put
that dome collapsed once during the production, so, you know, history.
But I love that. That's why I walk by I can see the Duomo all the time, and it reminds me that, you know, human beings can have, you know, the foresight to do things, and things will magically somehow work out-ish.
The world is more like that than
you think. Yeah, absolutely.
So, trust. Chris, do not mistake decentralized capability for decentralized control. Thanks so much, Chris and Amy. I look forward to keeping in touch with this topic by each of you.
Thanks, Rob.
Well done.